Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Today is July the 30th. Next Friday will be NFP. Let's be prepared for that. All right. So right now in 20 minutes, we got some CAD and USD green folder news, some CAD and USD orange folder news. And then an hour and a half, we've got some orange and red folder USD news, nothing big. That really moves market, but you know, red folder news you always want to be prepared for. Same as orange. Green, I'm not worried about. Orange could help us get the market jump started. Let's go look at Forex Factory. I use both Forex Factory as well as MyFX Book just from the standpoint of they both do not report the same info. So it's always good to see what's going on both sites to be prepared. So right now, in 20 minutes, we've got the red folder CAD and red folder USD is what it's called. So they're calling it red folder on Forex Factory, yellow folder CAD, and some more yellow folder USD. All right. We'll go look at the currency strength meter. Come on, let's go. There we go. USD a little strong, GP strong, CAD strong. We already know we got USD and CAD news coming, so expect CAD and USD to be strong. All right. All right. We can jump on the charts here. Yeah, we got some water. I think down here as well. All right, let's take a look here. All right, it is New York session, so we're gonna be putting up New York pairs. That's what moves during the session. Of course, you guys know the game. Anything you guys want to look at, we'll take a look at. Right now, I'm pulling up all the majors. If you don't know what the 7 major pairs are, they are the 7 pairs that I am pulling up as we speak. One of them, I don't speak its name. You guys know what it is. All right, just pulled up all 7 majors here. As you can see, GP USD, USD CHF, no name, USD JPY, AUD USD, NZD USD, USD CAD. All right. Go throw AIRO on top of these bad boys here. USD CAD, 4-hour chart. That ain't good. What happened? We're in an uptrend on the 4-hour. We are in a uptrend on the 1 hour. And the 15 minutes, we are in a downtrend. All right. NZD USD. Start with the 4-hour. 4-hour, we are in a downtrend. H1, we are in a downtrend. M15, we are in a, boy, the internet is really, we're in an uptrend. So it's kind of the opposite of USD CAD. All right. H4 and H1 downtrend. So we're looking potentially for sales with NZD USD. AUD USD, start the 4-hour, work our way down. Looks like we're in a downtrend right now. Let's take a look. Downtrend on the 4 hour, downtrend on the 1 hour. What's going on? And we are in, we're in an uptrend on the 15-minute, but look like this, as soon as this zone breaks, we'll be in no trend. We'll have 2 of each. USD JPY. Four-hour uptrend, 1 hour downtrend, 15 minutes downtrend. No name. No name is in a downtrend on the 4 hour, downtrend on the 1 hour, and on the 15-minute. Of course, internet. Come on. We're in the uptrend. All right. AUD USD just gave us a sell. We'll take a look at it. All right. No bounce. We're in the uptrend. We're not touching that. All right. So we already know what no name is in. USD CHF. Start off on a 4 hour here. Four-hour in uptrend, 1 hour downtrend, 15 minutes downtrend. And my favorite of all of the majors, GBP USD. It's been on an uptrend for weeks. On 4 hour, we are in a uptrend. On the hour, we are in a uptrend. On the 15-minute, we're in a, you guessed it, uptrend. All right, we got those out. I know somebody's already asking, so we'll go ahead and pull it up. Actually, I can't pull it up on this here. This is my funded account here, guys. They only allow me to trade Forex pairs. You guys can't see that. Hold on. Let me cover that up real quick. Top secret. All right. The Dirty 30 and El Godo. Where's gold at? Gold. Gold has been ranging for the last day and a half, about 24 hours. Anytime you see gold this tight right here, it's looking for a breakout. It's looking for a breakout. Let's go to H4. All right, so we're gonna start off with some little analysis on gold here. Got this double top right here. All right, got this double top. We got USD news coming today. Orange folder, yellow folder, green folder, red folder, silver folder. A lot of folder news coming for USD. All right, if you look back on June the 16th, you see this large liquidity candle right here. Definitely has not been filled. All right, definitely keep an eye out on that right there. All right, on a 4 hour AIRO, we are in a uptrend. All right, you see where I drew the double top is right where the AIRO zone is at. All right, 1 hour. We're in a downtrend, and on a 15-minute, we're in a uptrend. All right. I typically trade gold down on the 5-minute, so we'll take a look at the 5-minute, what that's looking like. Uptrending. All right. So we'll see how it plays out. Double top is going to be key today once this news comes out. Only two ways to go, up or down. And then what you guys all came for the show, the legendary US 30. What do you say? News should be out, what, like the next 11 minutes, I believe. According to my Facebook, we got 9 minutes until news. All right, dirty 30. So I'm gonna mark this one up the same way I mark up GER 30 for those who join the calls at 1 a.m. in the morning, Central Standard Time, with the solo cup and the fruit snacks. So right now, what we're doing is we are marking Asia channel. All right. So we mark the high and the low of Asia from the start of the new day, which is 4 p.m. or say 5 p.m. Eastern yesterday, and the start of London session. All right. So at the top, the high is here, the low is right here. This candle with this long wick was the beginning of the London open. So this is the lowest point of the Asia channel. It's the highest point. Next, we mark the equilibrium of the range. Why do we mark the equilibrium? So with indices, which US 30 is, and what an index is, for those who don't know, is a composite of multiple stocks. US 30 is comprised of 30 different stocks, hence the name US 30. So there's 30 individual United States companies, all right? The beautiful thing about it is that these indices love to play off of the Asia range. So we mark that so we understand where it's at. All right, so now you can see here, let's zoom out a little bit, let's go to H1, and you can see it's a pretty big range, very, very big range, all right? Next thing we do after that is we want to mark our order blocks. We want to mark our imbalance zones so we can understand where some of the institutional levels, key levels are at. All right. So we have here on the H1, we've got an order block right here. I'm sorry, imbalance level right here. For those who don't really know what imbalance is, you see this is a large institutional candle. Institutional candles are large candles. They're large and they're called institutional because it takes institutional money to actually make a large candle. For example, let's go look at No Name. So No Name, can anybody guess how much or what percentage of all Forex money goes through No Name? For those who don't know what No Name is, Euro USD. Can't even say it straight. Euro USD, the number one most traded pair. It's about 32% of all money in the foreign exchange market goes through Euro USD. So if the foreign exchange market is what, $7 trillion a day, 32% is somewhere around the neighborhood of 2.24 trillion. Yes, that's about right. 2.24 trillion is what goes through Euro USD. All right. To move 10 pips with Euro USD is approximately $1 billion worth of money it takes to actually move Euro USD 10 pips. So if Euro USD moves 50 pips for the day, that's about $5 billion to move it 50 pips. If it moves 100 pips, it's about $10 billion. There's a lot of money that has to actually go through Euro USD for it to move. All right. So those candles, because they're so large, 10 pips is not large, but it's institutional from the standpoint of it takes institutional size money. We don't trade with $1 billion accounts, but the banks, the hedge funds, they've got all your money that you think is in the bank account, which is really in the foreign exchange market. They actually have all your money that they're putting into the market to actually move the market the way that they want to move it. So that is what institutional candle is. It's a candle that is moved by those who actually have the purse strings, the large accounts. All right, so the imbalance level are levels where price moves so fast, the market makers, whose number one job is to place buy and sell orders together. So if we're selling something or we're buying something, they're gonna actually place those orders together. When price moves so fast, they can't place those orders together. Therefore, it brings imbalance to that individual candle or candles. Therefore, typically, price has to go back to that point at some time so the market makers can bring balance back to the market. So this is an institutional candle right here. There's imbalance, and you can see there's imbalance from the standpoint of the wicks. You look at the candle before, you look at the candle afterward, and you see there's a gap in between on this candle. That's where I have marked. That is the imbalanced area. Potential area for price to go back to this point, reject, or go through it. All depends on how the market is trending. All right. We got about 5 minutes to the news, so we'll mark that one there. With also, we'll go and mark this order block right here. An order block is really simple. Price is trending down here, and this is the first green candle that starts the what? The new trend, as you see, that's going up right now. This would be the bearish order block because price was going up here, and this is the highest red candle and the first one before the drop. You had one here, but look, you had to push back up. Then you had this candle, which led to the big drop. So this is another order block, and it's called an order block from the standpoint of price is moving in one direction. Therefore, there was a block of large orders that were placed in this vicinity to turn the trend around. All right. So this is our trading range. We now have our trading range. Actually, let me pull it out a little more. We got our trading range here. I like to establish a trading range so that we have an idea of where price may go for both the buy and the sell. All right. Come down to a lower time frame to 15 minutes to see if we see anything else. All right. As you can see here, price hasn't really been doing too much. Huge drop, large movement after during Asia session yesterday. I was definitely not on the charts. Anybody have any idea why there was so much movement? Price dropped a total of almost 2,000 pips from the start of yesterday until London session, 1,994 pips. Some of you guys in this room were born in 1994. If you were born in 1994, raise your hand. My man. All right, stop sharing real quick. We got some Q&A. All right. Hi, Nate. I want to know if you are in an uptrend for days, and on H4, for example, you see that you have 8 zones, so 8 green zones and 2 red zones. You see that the trend is going down for the last 1 or 2 days. How do you trade the bag? So when you see that, you want to potentially look at strategy number 6, which is the counter. That's the counter trend strategy, right? Yeah. Man, we get forgetting. I don't use it very often. The counter trend strategy. Whenever you see that price is starting to trend in the opposite direction, all right, the overall trend may be up, but again, there's going to be that time where it starts to make the new trend. You want to look at the counter trend strategy, all right? And the counter trend strategy happens twice a day. I need to update the videos, but we've established that it happens during the London Open, so the hour before London Open, the hour after London Open, as well as the hour before New York Open and the hour after New York Open. Also, you want to look at strategy number 9, the market maker strategy, as it will help you to identify what the overall trend is, all right? Because the only trend that matters is the market maker's trend. Because at the end of the day, they are the ones that make the market move. All right. What's going on, everybody? Appreciate it, Gloria. I need you, if you can help me with this bow tie, I'd be very appreciative. FOMC. We got FOMC news today? I did not see that. Let's go back and take a look. I'd love to have some FOMC news today. Before we do, let's go ahead and add AIRO to the chart. We got a few minutes. We got 1 minute before US 30 makes a move. We got a mark here. Jackie, if you see anything, let us know. Where's our other educator with Dante at, man? He hiding on us. Anybody seen cash? Put an APB out of him. No FOMC news. All right. So it's 8:30, and as you can see, US 30 is trying to make a move. You can see how the candle's getting violent, but it's not. It may be one of those days where we just stay out of the market, guys. Unless this thing really gets going. That is not how US 30 usually moves on the open candle. Let's look at gold. Gold's got a little movement. Not too much, though. US 30 is doing absolutely nothing. Where? Off the H1. I don't know what that is, Jackie. I trade on the 15-second now. We're gonna bring a guest to the stage. She wants to say hi to you guys. Everybody, welcome Jackie to the stage.
Oh, you
Tell me yourself. Tell me, I'm like a messenger.
Hi, everybody.
30.
Look, I just want to say hi. They was in the telegram. They said, Jackie, say hi. So I'm saying hi. So I am going to take over Nate's computer real quick. It is. Why your H1 ain't showing up? You preventing me from going to the H1 time frame? Oh, it's a Mac. Everybody know me, know how I feel about these Macs. No offense. All right. You see this rejection candle right here? I like that one. You see that, Nate? Can you see it? I don't know how to move this.
No, I don't see that.
You do see it.
Mm-hmm.
Move this so I can look at those. I need to zoom in.
Yeah, wait for it to go up. There
okay, thank you. Wait, to the left. There you go. All right. So do you see this candle right here, y'all? You see all these rejections that's happening off of this support zone? What I was telling Nate just now that I liked about this candle is when it's not only rejecting. When I say rejection, that's what these wicks are. So a lot of times when you're dealing with trading, you need to understand candlestick formations. If you guys have been watching Nate's videos and how he's teaching you how to utilize AIRO, or even if you went through the Forex Basics course. So for those of y'all who have never traded Forex before, Nate has wonderful videos in the Auvoria Prime back office that goes through the basics of Forex. And he walks you through market structure, candlestick formation, stuff like that. So one of the most important things in trading and what you see in AIRO is candlestick formation. So you see the red and the green, and it tells you green means going up and red means going down, following the trend. That's what those trend colors are. But also what you will start to see is, what do these wicks mean? These wicks are, and they're called wicks because they're called candlesticks. So, you know, it's the wick of the candle. So these wicks, whether it's above or below, a lot of times people think it means exhaustion, meaning that price can no longer keep going down and it's pushing back up. So then it's creating a wick. Also, what it also could be called is a form of rejection. So what this candle, this current hour candle I'm paying attention to, is because we're in the 8 a.m. Eastern time candle. Remember he said between hour before market open and an hour after, you could look for counter trend trades, right? And so this particular candle that's rejecting off of this support zone and pushing up, I like it for me to think about taking a buy. Those things are powerful, especially since it's in the zone that Nate has already marked off for what you're looking for. And if it wants to play between that zone, so there's a little bit of sauce for everybody. If it wants to play between that zone, you can kind of scout the trade up and down. And all you're doing for is looking for these rejections. So that's what I was telling Nate on this H1 candle. I said, oh, I like this rejection. So now if I go down to say the M5 or the M1, now look at that same candle. And you see how it is. This is 8 o'clock, I think, around here or something like that, right?
I forget we are Eastern time, so we have an hour until New York open.
Yeah.
I'm on Central, so we still got an hour until open. That's why there's no volume yet.
No volume yet. You're just looking. I'm trying to make sure I find 8 o'clock or something like that. I think it's this one. Maybe. Close enough. Pretty much what I want to look at. You see how price went up and it came down. I like this rejection. Look at what this rejection did. The next candle, it shot right up off of a zone. See what AIRO just showed y'all? You can look at it on the M5 and see there's a support zone where the rejection, next candle, shoot up.
What candlestick formation is that?
This is not an engulfing candle, but it's a possible railway.
Railroad.
But it's good though, because that's a candlestick formation that goes over in your AIRO strategies as well. You gotta learn that. It's a form of reversal. Okay, I just told y'all if you want to scout, you can go ahead and scout off of a zone. Why is it important to scout off of a zone? Because zones, when price pushes up off of it, it gives you momentum. It gives you momentum to keep going. That's what you want. That's why we're in the money zone. You want momentum. Now it's Friday. It's the end of the month. There might not be a lot going on. I'm mad because I should have been in this trade. Didn't I tell y'all this thing was going up and it was a buy?
So you had a railroad track off of the AIRO support zone, followed by at this candle here. This is a bullish engulfing above the AIRO moving average. Easy trade should come up here to the 50% level of the equilibrium of the Asia channel, which is going to be about, because US 30, probably about 500 pips.
Yep.
140 pips.
There you go. So y'all see how that just executed? So now all we got to do, look for it to do it again. Because we scalping right now, and it probably will give you more opportunities of the same thing after 9 o'clock. I just want to talk and say hi, but I like that. That's why I was looking at the H1 candle. And when I saw that rejection on a higher time frame, you can come down to a lower time frame and look for opportunities like we just went over. Y'all so quiet. Did y'all like that? I mean, did y'all follow what I was saying? Okay.
Was it a long last night? What happened?
I'm gonna give you back your computer, but in this same thing that happened on US 30, you don't have my favorite up here.
S&P?
Yeah, why are you ignoring S&P? I done told y'all stop ignoring S&P.
It moved too slow. Go ahead, mark it up.
Very similar. There you go. All right, I'm gonna show y'all something too, real quick. So this is S&P. All right, so S&P is another index, just like US 30. Everybody like US 30, why? And the other name for US 30, if you are in your brokers, they all name it differently. It could be Dow Jones, it could be Wall Street. It ain't called Dirty 30 on a broker. We just call it that. But S&P can be listed as US 500 as well. And it's the same thing as the index. It's 500 companies that's in the index, right? So the three indexes, the US indexes are US 30, NASDAQ 100, and S&P. There's another one called the Russell 2000, but it's very hard to trade that one, or find brokers that allow you to trade it. But the point I'm trying to get at is if you are trading US indices, they tend to all three run at the same time in the same direction. So if you're used to trading US 30 and you're looking for a buy, you can also look at S&P or NASDAQ for the buy as well. And what that will do, compound your entry. Doesn't mean that they're gonna give you the same entry at the same exact time, but what it does is if you think about it and you're like, oh, they're all going up, one is gonna go up first, and then the other one is gonna go up, and then the other one. So you potentially just turn one trade opportunity into three, okay? That's a little extra sauce for you guys, and I'll show you why. I just said I had this rejection candle on US 30, and it was coming off of a zone. Well, here is, this US 34 buy. I'm feeling some kind of way about this. I did not call that buy. It's okay. We ain't gonna take it just yet. Not yet. It ain't time. And be patient with y'all trades, y'all. If you missed it, it's okay. Don't trace no trades. You chase trades, you end up blowing accounts. Speaking from experience. All right, so here's S&P, same thing. This is that same 8-hour candle, not 8 hour, 8 o'clock candle. And I got the, I know, right? Whoever's trading 8-hour candles, you in trades for a long time. But this is that same rejection. Now, it's not coming off of a zone that you see on AIRO, but you can kind of just look at it and say, okay, I have a rejection here. What does it show on the M5 as well? Similar situation. If you would have marked up your Asian session zone, you could do the same thing on S&P that you did on US 30, and you can do the same thing. You see that same move? What is that? We had the rejection. We got this possible, looks like somewhat of a complete railway road, and it did the same background, and then bullish engulfing, and it went up. Same exact move that US 30 did, but this is S&P. This is what I'm talking about. You can compound your same entries. Okay, and things you can look for. So we're gonna do it again. When momentum is in the market, we're gonna do the same setup and just look and see. The easy thing, reason why I brought up S&P is because a lot of people have the account balances to trade US 30 because it's so volatile. But you can trade S&P because of what somebody said, it moves a little smoother, and you don't have to have as much volatility to get what you need.
Slower, not smoother.
Smoother. I would say this, S&P is like a really good paying currency pair. Really good paying currency pair. All right, so I think that was all I wanted to look at. So I just want to make sure I set that up. And if you want to look at that US 30 and 5, bounce, arrow, go. The only reason why I would be cautious about taking this right now, one, because stock market hasn't opened yet. And two, because you're right at that Asian line that Nate marked up earlier. So I would be wary of taking this just yet. I kind of want to see it bounce off of this area or see if it pushes through. That's kind of why I'm not necessarily taking it just yet, me personally. Would you take that trade, Nate?
Nope.
Okay.
Another reason I wouldn't take it, as we can see, going into the open, or actually the majority of the day, price has been respecting the bottom of the equilibrium of the Asian channel. Typically, what that means is that when the open happens, it will be selling off. So I'd be expecting to sell at New York Open, but that's another reason why I wouldn't take the buy.
Nice. What does it look like on the M1 too? Real quick. Sorry, I'm in the zone now, y'all. I'm looking for a trade. See, look at that. I like this here. That bounce and then that push up. Here's actually where that move is. Look at that rejection, you guys. Oh, that's beautiful. See that? Rejection off of the zone, and then it pulled back a little bit. It didn't even matter, and then boom, gone. I think this is that rejection I was looking for in the candle. It sure is. Remember I just told y'all that? Look, not this one. Come on. It's not 9 o'clock. I'm trying to bring this over. Here it is. Right there. That candle. that rejection off the zone and then shoot up. So what I saw on the H1 forming, you come down to a lower time frame, see where it initiated. If I was quick enough, got in and could have rolled it all the way up. So now instead of you looking at 100 pips, this is a lot bigger. If you're coming down here, I would have got in as soon as I seen the rejection. If I was looking for it, would have been in here. How do you measure that for me, Nate? Off your mic, like right here, off the second rejection, right off the zone.
Right here?
Next candle. Yep, there. Before the engulfing, yep.
I would have took off the engulfing, but that's just me.
I didn't want that drawdown. There you go.
Right up here?
Yeah, I would have shook the zone. Remember, because you marked off the Asian session? If it hits that zone, that's over 600 pips, ain't it?
660.
And we would have been still in profit by now. So that's another benefit of making sure that you, when Nate marked off his zones onto H1 and everything, it's important to mark off y'all charts because that way you know where you're playing around at, right? And you're supposed to do it ahead of time. But anyway, as you go through it, and as soon as you see a rejection like that, you can run down to the lower time frame, look for an entry, and get into your trade and just ride it up. Real simple. And all it is that you might not get it right now, but after you keep practicing, it'll start to, fall into place for you. And you'll be able to train your eye. That's the whole point of this. Is let AIRO show you what the market is doing, and then train your eye to see those entries. And you shouldn't have no problem after that. So now I gotta wait. Then I'm gonna give you back your computer. I'm gonna sit down and be quiet. Hopefully they ain't have no questions. Also quiet.
It's too quiet in here. I like some participation. Check the chat. Chat blowing up.
Are they? Oh.
My man Looney. Looney, so everyone's here. So everybody's here as well. It's not just me and Jack. We got some more here as well. Dante's here in the crowd. He's eating breakfast. Cash is here somewhere. Oh, the chat blew up because Jackie got up here. They just want to say hi, Jackie. So.
Oh, that's so sweet.
Definitely not from Philly. I mean, been there a few times.
Y'all need to come to Philly.
Can you please show how you measure or draw the equilibrium for indices? All right. Mariska. What's going on, Mariska? We wish you were here. We did do a disclaimer for you, Mariska, just so you know. All right, so let's go over equilibrium for indices. Equilibrium. I haven't pulled this one up, so we'll pull up NAS 100. All right, so the equilibrium. First of all, does anybody have an idea of why the indices play off of Asia channel? No guesses? All right, we're gonna teach you a little bit here then before this New York Open. All right, so they play off an Asia session because Asia session is a session where the market makers for the indice pairs, they are working to pick up orders. There's no volume. All right, when there's lack of volume, you tend to want to stay out of the market because the slightest bit of volume can literally push price in one direction faster than it would any other time. All right, so during Asia, as you can see here, let's go back and look at another day. All right, so we see here, here's Asia on NAS 100 yesterday, trending down, somewhat of a continuation from the day before. All right, so guess what people are doing? They're selling. They're trapping sellers here. All right, little pullback going into London. You got the fake out going to New York. So everyone that was holding down here for the sales, they're like, here it comes, we're getting ready to sell. And then you got the fake out come New York Open. That's all they do, all day, every day. They, depending on what you're trading. If you're trading, and it's why I tell people all the time, if you are trading a pair traded during the session, it is meant to be traded. When it's not meant to be traded, the market makers are setting up the trade to fake you out. They're gonna set the market up to look like it's heading into a sale. Then they're gonna trap you there by pulling it back very quickly. They might bring it back down there to you, make you feel, oh, I'm gonna go ahead and let me double click and let me get another entry in there. And they're going, New York Open. And this candle right here is New York Open candle. This is Nas 100. It's an 863 pip candle. What's gold doing right now? Gold. News hit. We talked about that double top, didn't we? So Forex Factory, we got core PCE price index. So we have a little red folder, some yellow folder, and my FX book has, come on now. Just orange photo news on my FX book. All right, let's go back and look at that gold. So remember on H1, we talked about that double top. Talked about that double top on the H1. All right, that double top was right there, right where the AIRO resistance zone is at. Let me change this color here. See if we can't find us a trade real quick. See if we can't find us a trade. Yeah, go. There's a double top right there we talked about on the H1. Also on H4. All right. Now again, we are pre-New York Open. So when that volume really does come in, because gold is a New York session pair, it could be a fake out. It could be making a nice move to the upside as well. A lot of room up there. And as we talked about in the 4-hour candle, you still have all this liquidity candle here. It's institutional candle that still needs to be rectified. This is an imbalanced candle that still needs to be rebalanced. All right. As we know, we take no trades inside of support. I'm not looking to take any trades on gold. We're in an uptrend, it's going to support, we leave it alone. So to finish answering the question, how do you mark the equilibrium? So you mark the high and the low of Asia. The high and the low, you mark it between the start of the new day. So this right here, where the start of the new day happens 5 p.m. Eastern Standard Time every day. Start of the new Forex day. All right, not an actually new day, but it's a new Forex day. All right, and then the next time happens at the start of London. All right, so the start of London is where the stop happens. Let's try to make sure we have that marked correctly. All right, one candle over. All right, so this is your area right here. This is your Asia channel. It's the high, right, within this box. There's the low, all right? That is your Asia channel in this box right here, all right? Easy thing to do to mark the equilibrium, and all equilibrium is a fancy word for the halfway mark, the 50% level, all right? You just bring out your fibs. If you don't know what the fibs are, go to Jackie's calls. She uses them religiously. You come to my calls, I don't even know if I know how to spell fibs because I don't use them. Used to tell a lot of fibs when I was a kid. All right. So you go from the high to the low or the low to high, however you want to do it. All right. So here on the fibs, I got the 1 to the 0, 0 to 1, whatever the case may be. You just mark your fib there, and the middle line is your 50% level. All right. And so you can simply just put a horizontal line at the 50% level, and that right there is your equilibrium, your 50% mark, your halfway mark. All right. Indices love to play off of the Asia channel because that is where they are trapping buyers. That's where they're trapping the sellers. They are moving the market in ways to entice people to put money into the market outside of a session so that they can then turn around and use that volume to then put in a trade, or I'm sorry, a move when it's time for the market to move. For NAS 100, it'll be in a matter of 35 minutes. S&P 500 just gave us a buy candidate. Jack, can you see anything? Nothing? All right. You like the gold sell?
Yeah,
Support zone about to disappear? Why did you take it then? Yeah, I wouldn't take it either. Take it to that zone. Triangle breakout. Yeah, that's a rectangle breakout right there. So Jackie brings up a good point of a rectangle breakout. What is a rectangle breakout? All right, so here is the rectangle right here. All it is identifies what's being identified in this rectangle. Price is just ranging. That's it, just ranging. Like we talked about at the beginning with gold. It's been ranging for almost a full day. See, quarter of the day yesterday and about 3/4 of the day today. So this just broke out. This rectangle breakout is another way of identifying breakouts, kind of like you would see with a wedge. Where's Al in the house? Al, the wedge expert. You want to know about wedges? That's the man to ask right there. But very similar, wedge breakouts, rectangle breaks out. There's different strategies around box breakouts, triangle breakouts. They're all very similar because it's all about price ranging in a certain pattern, and then you're waiting for the breakout. After the breakout happens, you wait for price to come back, retest that area, and then to either reject and head back in that area that it broke out in, or to continue. So if it continues back up to the upside, then you wait for it to come back and retest the top of the rectangle to look for the breakout to the upside. Very same thing you do with wedges, boxes, triangles, whatever it is, the pattern that you see. All right. So in this case, we will see how it works out. Maybe a good trade to take if we get price to come back to retest and then they give us a nice candlestick formation or price action move back to the downside. So we'll keep an eye on that one. We'll keep an eye on that one. Just like that. We'll keep an eye on that one. Might be a good move. Already started to make its way back up to the rectangle. See if we can't get a price action rejection off that for a nice sell. All right, but yeah, the answer now. So yeah, that right there is how you mark your equilibrium. That's a little backstory on the actual equilibrium. All right, doesn't happen all the time, but a rule of thumb is typically if price is respecting the 50% of the equilibrium, or the equilibrium of the actual Asia channel, that is typically the direction it will go when the market opens for that particular pair. NAS 100 is a New York indice. So if price continues to reject the bottom half of the equilibrium, typically when New York session comes out, it's going to sell off. Now, it may sell off shortly, come to the bottom of the Asia channel, and then shoot up. or it just may sell off and drop to the bottom of the earth. But typically that's what you look for is when it's respecting that. All right. Again, you don't use the AIRO channel as your only guide. You need to understand other aspects. That's why we put AIRO on top so we can understand the overall trend. We understand where support levels are at, resistance levels. You need to understand, of course, your price action. Understanding price action, understanding if you're in the AIRO bag chat, make sure you go to the pinned messages. There is the Forex Bible, Forex Candlestick Bible PDF that will walk you through all the different candlestick formations. The candlestick formations are ways of helping you identify where price is headed, because candlestick rejections at key points give you an identification. So for example, as we talked about with gold, well, actually, let's go look at US 30, as Jackie pointed out, the trade she would have taken. Let me pull up US 30 here. All right, let me zoom in a little bit here. As you can see here, this candle right here is a upside down hammer. All right, so I call this an inverted hammer. Inverted hammer at a what? AIRO support zone. All right, you already had this candle reject off the order block. This now is a inverted hammer off of a AIRO support zone, followed by a bullish engulfing candle. All right, it's engulfing because this candle right here, the body of this candle is taller, bigger than the previous candle, and it eats it, so it engulfs it. This is a classic buyish or bullish momentum price action candlestick formation. As you can see, what happened as you entered in next candle, you had a little pullback here, and then as you see here, price ran all the way up as much as 510 pips. All right, that's price action. There's multiple types of candlestick formations, all right, and all you look for is these candlestick formations at key levels in key directions. All right, in the strategy video number 8, which is Jackie's strategy, the fib strategy, I talk about the 5 most powerful price action moves that are actually out there. You've got, of course, the engulfing. You have the railroad, however you want to call it. You have the hammer. Good one. Doji. And man, I need to go back and watch the video myself. What's the 5th one? I only use 3. Hey man, you've been studying. Good job. Tweeter tops. Tweeter tops, tweeter bottoms. All right. I don't see those very often. So those are the 5 most powerful out there. Hence the reason, and again, you want to go after, again, I only work on 3. I've only utilized 3 because those are the 3 most common. But you want to use what works for you. So that is price action. So understanding that, understanding what key support and resistance zones are at, obviously help you to identify where price may be headed. No name made a move. Let's go look at it. Nope, no entry. So no name gave us an arrow to the downside. We're not looking to take that move. USD CHF. Not really moving right now. USD JPY is making a move. USD. Nothing really moving right now. We are in summer months. Volume is very light. So definitely being careful where you are. If you're going to take trades during the summer months, you want to look at higher time frames, or you want to definitely trade only in the session that pair is moving, because that's when you have the most volume in that pair. The more volume you have in the pair, the more that pair is going to trend in the direction that is headed, giving you the best opportunity to catch some pips. We're just gonna wait on gold to see if we can get some price action off this zone here. You can put some fibs. You ready to put the fibs up on gold? US 30 just gave us a sell. It's US 30 gone. It's a good move right there. Bag entry. We missed that. Nice bag entry. Downtrend on the M1. Already up 60 pips. Got to be more careful with those indices when they move so fast. All right, so I need some participation. Everybody quiet in here. Somebody ask a question. Oh, let me go check the chat. They talking to me. Nobody else is talking to me in the room.
Nobody in your room got questions?
Ain't no problem, no problem, no problem. You are welcome, my friend. John said he's eating good on gold right now. I knew somebody was in that trade. Congrats, man. I'm still trying to figure out how to tie this bow tie, man. Struggle is real. Deborah, welcome to the call. All right. Somebody in the room asked me a question. Somebody got a question. I know somebody got a question. Somebody want me to look at something? No? Everybody need some coffee? Cigarette? Pick me up. Oh, nobody's on the internet? Yeah, the internet struggle. I got a hotspot, so if you guys want to plug in tonight, you know, it's about as good as it gets. They don't really provide internet down this way, unless you're paying for it. Man, what's gold is just saying bye-bye.
I feel like I want to get into a gold trade.
That's why I asked you about the fibs.
You want to see my fibs? You want to draw the fib on it? I feel like it's doing a fib level breakdown.
Off the what fib level?
23.6.
What time frame you on? The what?
H1.
I don't even know what that is. Anybody ever heard of the 23.6 fib level?
H1.
I never heard that fib level before. I don't know what that is.
Close below it. So it should be going to 38.2.
You drawing bottom up, right?
Yeah.
Oh, I got a different fib up here. Let me take that one off. I need to get the standard fib on.
You want to see it? Trade to the default.
That's the struggle bus right there.
Anybody in there trade with the fibs before? I don't hear it. Raise your hand if you trade with the fibs before. Okay. I like to see that. Yeah, y'all know if y'all trade with me, y'all best to have the fibs on y'all chart.
All right, so here we go. So what Jackie is talking about is on the H1. All right. Okay, I think we drew one from the wrong level. My bad, Jackie. Hold on.
Cool.
Let me pull it up here. Told you I don't mess with these fibs. London sessions, we deal with breakouts. We don't do fibs. Somebody teach me fibs. Jackie, you refuses to come on London session and teach us fibs.
Yeah, y'all know daggone well y'all not gonna see me on London session.
All right, there we go. There we go. So you can see here, all right, we are what? We are in an uptrend right here. We're in an uptrend. All right, so when you're in an uptrend, fibs, you're looking for pullbacks. If the overall trend is up, typically you're looking for pullbacks to key fib levels, and then you're looking for price actions off those key fib levels. All right, when you get the price action off that key fib level, which to make it even more powerful, if that price action at the key fib level is also at a key support or resistance zone or supply or demand zone, you have a potentially good entry for a retracement, because all fibs are a retracement. You're looking for a price to go up, come back down to a level, head back up. All right. Jackie is the master of fibs, but she's found a way to trade it in the opposite way. So she's looking for breakouts. As you can see here, we've drawn this from top to bottom. And this candle that broke out closed below the 23.6 level. All right. The 23.6, 38.2, 50, 61.8. Those are the four major key fib levels based on Fibonacci is what fib stands for. Price is closed below the 23.6. Jackie believes because of that and the strength we have in the markets could see price hit down to the 38.2, all right, which would be a nice move of about 56 pips. Jackie, where would you put your stop loss at?
What stop loss?
Jackie doesn't trade with stop losses, all right?
I'll put it at the previous high.
Previous high. So the previous high, this previous candle here, the breakout candle, would be where the stop loss is at. SPX just gave us a sell, Jackie. You want to take a look at it? And it's not a bag entry.
By the way, when you draw the fib on the H1 that he's showing on this breakout, it's not an immediate trade. It's a trade that could be like all day. So when I do trading on the H1, I be on trades for like 2-3 days. Nate likes to be in and out in a day, but I like my trades to last.
5 minutes.
Like keep it simple. You know, I just want to set my trade, set my TP, maybe a stop loss, and then go about my business. Y'all probably look at me crazy, telling me, son, she ain't got no stop loss. That's not a good sell on this.
Yeah, I wouldn't take it. It's just following US 30. US 30 had a sell on the 1 minute, so it's just following US 30. All right, we got participation. Somebody got to ask a question. I have nothing to talk about. GJ. I can always look at GJ. That's not a question, though. With GJ? All right, let's go look at the 4 hour. All right, so on the 4 hour here, we're just going to do naked chart analysis right now. All right. Wow. Okay. All right. So does everybody see this huge drop right here on GJ? Anybody see this huge drop? It's 3,500 pip drop. This was Brexit 2016. All right. Brexit 2016. I actually started trading that day or that week. I said, I started that month. Brexit, see if I can remember how this worked. The European Union. No. The UK is looking to leave the European Union. At that point, they were looking to vote on the ability to leave. So we are now reaching back to Brexit levels before the drop happened. All right. That is a key point on the chart. I had to come all the way to the week chart to be able to find that. All right. So this right here is a very powerful, very strong, all right, order block. All right. You can see here in in 2018, we hit that level and we sold off from that level very quickly. All right. So we are now back to that level. All right. So we hit that level. We rejected that level. All right. Now that we know that we're at the Brexit level, because of everything going on over in the UK, you really got to pay attention to the news. But if nothing really goes on, I don't see us breaking Brexit levels. So what I expect, or what I, you asked me about what I would see over the next week. Over the next week, I would be looking for a price to come back up to this trend line here. All right. It's already rejected Brexit level once, and I'm looking for a nice sell-off over the next week, 2 weeks. That's what I would expect. Only reason it would break that Brexit order block that's right there would be there had to be some very strong news coming out of the UK. Right now, there's not much going on. Right now, overall, all economies throughout the world are still dealing with lack of people going back to work, still dealing with, now what do they call this thing? The Delta variants, high unemployment. So the economy's not good around the world. Therefore, I don't see that the actual Great Britain pound will get strong enough to go to the moon. So I'd expect a sell off here over the next couple of weeks once it hits key levels. So that's a combination of technical analysis as well as fundamental analysis. Fundamental can be just as powerful or more powerful than technical analysis. At the end of the day, when news happens, it doesn't matter what the technicals say, prices, it's gonna move. Good question, man. Anybody else? Somebody got something, come on now. Hey, who's in the house? Mr. Swanson himself. You wanna come give us some market analysis? Security detail? All right. All right, guys, so we've got 14 minutes to the end of the session. We've got water, cookies, and everything right outside. We will not be able to, again, I may just take the computer and sit outside the room, but we'll not be able to trade into New York Open, as we got the doors opening at 9:30 for the opening session at 10 a.m. All right, so for those wanting to catch the New York Open, to catch potential gold move, US 30 move, Nas move, will be outside the room. So once everybody's done and here in about 14 minutes, we'll exit the room. Everybody get something to drink, use the restroom, then we'll come back in, and get ready for the opening session at 10 a.m. We got 13 minutes left. Any questions, comments, concerns, anything you want to know that you never knew? What's up, man? You doing all right? You want to come teach us something? You are up 15 pips on no name. Congratulations, man. Congrats. No name. You're up 15 pips. Go look at it.
I like it.
15 pips in the sale. That means you've probably been in this trade a couple hours since 6, and you didn't send a signal to the chat group so we could all get in. Counter trend. Counter trend trade. We are in an uptrend. Why would he have taken that counter trend trade? Let's go take a look at it. Let's go take a look. All right. Hold on real quick here. Great trade, great trade. All right, so here on the 1 hour, let's go down to 15-minute here. I went to the 1 hour and I found what? Found an order block. All right, so you got a 1 hour order block on the 1 hour. All right. 1 hour is trending down. All right, for those who had asked the question a lot about looking at the 5-minute for the overall trend, the higher time frames are the truth. Lower time frames are what you utilize for entries. When you want to identify your overall trends, you want to look at your weeks, your day charts, your H4, your H1. You don't want to look at the 5-minute for the overall trend. That's a temporary trend. You want to look and utilize the M5 and the M1 for potential entries. All right. So on the H1, we're in an overall downtrend. So the H1 is telling us already we're looking for sales. H4 is also in a downtrend. All right. So both the H4 and H1 tell us we're in a downtrend. We come to the 15-minute. All right. I marked the order block on the H1, and then I also marked the imbalance level here as well for a potential trading range. So now we understand our trading range. All right. You can see here inside of this order block, you had a doji off the top of the order block right here, all right, followed by a small but bearish engulfing candle. Nice little entry right here after that bearish engulfing candle, all right, thus giving you a potential, you're at 15, but right now it'd be about 15, 20 pips in that range, depending on your exact entry. You probably may have took this one right here. Which one you take? This one right here. All right. After that engulfing candle right there, you took it. That doji happened, you double dipped, didn't you? Good man, good man, good man. So he took this inverted hammer right here at the top of the order block, followed by a bearish engulfing. All right. So his entries are about right here. Then you got another entry off the doji. So you got two entries. Sitting pretty right now. It's price action. It's understanding the overall trend. Key levels. We got 9 minutes. Comments, questions, concerns? The zigzag, some people know how to make it work. I don't necessarily trade the zigzags. They confuse me. But there are plenty of people that trade the zigzags. Now, don't ask me about the settings. I think someone uses the standard zigzag settings, and then they'll throw a second zigzag. Matter of fact, some people have asked about it and have had some trouble. Mr. Cash himself has shown me how to set up double zigzags. So we will add the zigzags to the chart. All right. To find it, you simply go to this gold folder with the gold star underneath the word charts. It's your navigator. It's going to pull up your accounts, your indicators, expert advisors, and scripts. You want to come to the indicators, open that folder. I believe, where is zigzags at? It's Bill Williams? No. It's at the bottom. Where? See, I don't even use it. It's a custom indicator. There it is. So we scroll down to the bottom. I got a bunch of indicators in here. There it is, zigzag. All right, hit zigzag on. This is the standard settings, the 12, the 5, the 3. All right, let me make that little, let's make that little. There is the standard zigzag right there. All right, standard zigzag. Now, I know you guys have learned on Cash's binary calls about the double zigzag that he utilizes. So to actually place it on this chart right here, you add another zigzag. You need to change the color. Let's see if I can get this right the first time. We'll change the width a little bit as well. And then you go to your inputs and you change it. I believe it's 211. And there, now you have double zigzags on the chart. So the red zigzag gives you the overall trend, all right? And then the yellow zigzag shows you more or less price action, all right? So you can see here, you got an information right here on the zigzag. You would think a sell, but why would you take a sell? Because this zigzag is telling you, which is the overall trend zigzag, that you're looking for what? Looking for buys. All right, so guess what? Look at this zigzag right here. Boom, 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 boom. That's a what? W formation, bearish engulfing, bullish engulfing candle. You could easily put a what? A buy trade here and run it up. Now again, it's not many pips because this is no name. And no name, as we talked about earlier, $1 billion just to move price 10 pips. Hence the reason why I don't necessarily trade no name. That's how you put double zigzags on the charts. I know a lot of people have asked about that. Matter of fact, we can use zigzags. Let's see if it works out. All right, see if it works out for the sell trade here. Overall trend is down. I wouldn't take a trade right now, but that trade from earlier would definitely be above the previous high, about 3 to 5 pips. So if your entry was off of this doji here and this bearish engulfing candle, you should have a stop loss of about 11 pips above the previous high. So we got 5 minutes. I'm going to make my way out to the lobby, grab some water, get ready for the US 30 Open, New York Open. So we see if we can catch us a nice bag with US 30. Make sure to tip your waitress, and I will see you guys at 10 o'clock.